Gap is this right here. Gap, gap. Okay. Strong gap there. Okay. Because it's coming out of a base. And then a weak gap from here. Okay. But this is a strong gap because it's coming out of a base. But then it gets extended from the 20 moving average. Okay. But this is a strong gap. And then it gets extended. All right. How many of you here know the extended move technique? That's a powerful technique. You love it, Rishi? Yeah. Yeah, it works like a charm, Dan said. Yeah, it's a powerful technique. Everybody needs to learn that, okay? So I think I'm doing the methodology in May. Make sure you attend. That technique alone has saved me and made me, a small fortune, literally. Jim saying, Nick, but it gapped up in the direction of the longer-term up move, Zillow week. Yeah, but look what it's coming out of, Jim. It's coming out of this sideways base, right? So you see how you're consolidating at 35? Boom, gap up, gap up. But what happened here is now you're extended. Price can only go what from the 20 moving average? Price can only go so far. Yeah, it can only go so far away, right? Like the tide of the ocean. Price goes out, comes back in, right? The blue line, that's why I have it colored blue, because it's like the ocean. I consider that the ocean, right? So you can only go so far out, you got to come back. And look what Zillow does. Goes into double top. If you're a savvy trader and you're a little bit gutsy, you can take that, okay? But not an easy trade, all right? But look what it does. Overbought, extended. This closing above here, though, is a good sign for the stock, but just got rejected by the sellers right up there at that high. And it did pierce through the high, too. So that's not an easy trade, okay? Zillow trades about 1 point higher than the double top from September 2012. The reason for the move past the double top is because generally light volume in the stock. Light volume stocks overshoot higher than most people think, right? So light volume equities do shoot higher. All right, here are the rules, and then we're going to get into, I want to read these rules out to everybody, and you're all going to get a copy of these slides. So please make sure you go over them, you study them, okay, and read these rules. These rules are written for you. If you follow these rules, you'll be in really, really good shape. Then we're going to go over tonight's gap plays, and then we're going to look at what's coming out tomorrow. And I'm going to show you again how to find them, how to set up your charts, and make it real, real easy for everybody. All right, 6 gap rules that traders should follow. Identify whether the gap is strong or weak. Remember, weak gap trades are the best scenarios in the morning. Strong gaps can still be traded, but they do come with more risk. How about light volume stocks? Do they come with more risk? Stocks that trade less than 1 million shares a day? Absolutely. Okay? Are we going to trade stocks that trade less than 1 million shares a day right now? No, 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 no. We're going to trade them when we get this technique down in about a couple of months, maybe 3-4 months. Okay? And then if you do that, are you going to look for 2-5 retraces on light volume stocks, or are you going to look for, say, more 50% 618s? Yes, exactly, 50% and 618s, okay? Those are going to give you better chance to make money off of light volume equities. The light volumes are good because of the fact that you can make more money. So I've had light volume equities where I've made 7, 10, 12 points in a day. That's pretty spectacular. Even if you just, have a few hundred shares or you have 1,000, that's a big payday. That's a nice trade in just, sometimes in an hour. Today, if anybody watched the morning video, I gave Sherwin-Williams out as a trade today. And I said, as stock gets down to 280, be a buyer. And look what it did. Went from 280. This is all 10-minute candles. All right, so you got 1 bar, 2 bars, 3, 4, and 5 bars. Stock went up to 287, 288, almost 288. It's pretty incredible. And if you take a look at the daily chart, does it trade more than 1 million shares or less than 1 million shares? Less than 1 million shares. You get those bigger moves off of those thinner names, but you also get the bigger moves to the downside as well. So today that level was a mathematical number that I came up with at 280. You guys can watch it even if you want to watch the morning video tonight. It's still up on the blog, and you'll see that was a great move. I think only 3 members in the chat room caught that this morning, and 1 did not get filled. So, but either way, it's over now. All right, let's get back to number 2. Find the best support resistance levels by using the retrace levels on bigger time frames. The daily chart retrace levels can be good, but the retrace levels on the larger time frames are definitely more powerful. Okay, so I'm going to go over this a little bit more when we're going to get into the time frames. I'm going to hopefully look through the gaps tonight. I haven't really done that. Only one I did that with was NOW, and you saw how that played out. But we're going to cover more of that in a little bit. All right. If you play a strong gap play setup, please remember that you want to do a quick trade. Okay, we're not looking for a lot out of that market. Also move the stop loss into money or break even after capturing a quick gain. Strong gaps can always trade higher or lower than you think. All right. So remember, we get strong gap, we're looking for a little bit out of the market. Weak gap, we could look for a lot out of that market. Okay. But we always use good money management, and once we're in the money, we always move our stop to break even. The stop loss will usually depend on the equity. As a general rule, if the stock is very liquid, lots of daily volume, then use the normal range for the intraday candle as a stop on your support resistance. For example, a stock such as Broadcom, which trades 6 million shares, would be much different than a stock such as Ralph Lauren trading 500,000 shares. Ralph Lauren will obviously need a wider stop loss when trading the morning gap. So if you're trading Ralph Lauren, which trades 500,000 shares a day, how are we going to determine our target and our stop? Everybody type it in, please. We're going to use the smallest range bar on a daily chart, high to low. We're going to take the high to the low, the smallest range bar. Okay, perfect, well done. Now, if we have a stock like Broadcom, which trades 6 million shares a day, how are we going to find the target and the stop loss? 10-minute wide range bar. Are we going to use the average wide range bar, or we're going to use the biggest there is ever? The one. We're going to use the average. We're going to use the average wide range bar. Okay, excellent. Excellent. Yeah, because you don't want to give yourself too much. You want to be as conservative as you can. I'm a conservative person by nature, especially financially. So you want to be conservative in your outlook. You want to just make money, move on to the next one. Okay? Before the opening bell, traders should isolate a couple of potential gap plays. In the beginning, when learning and trying to master the strategy, traders should just trade weak gaps. It is also important to use very small share size until you become very familiar with the strategy. Once you are comfortable, you can start to add your share size. Remember, we must crawl before we walk and walk before we run. This is a process like anything else in life. Okay? I always tell traders, I stress it, regardless of whatever you do, regardless, you always start small. Okay? Once you get good at this, you're going to do this for the rest of your life. Take the time to do it correctly. Okay? This is a strategy I've been using for 15, 16 years. I don't even know how long I've been doing it. I do it every single day with a tremendous degree of success. I give it out to you guys with a tremendous degree of success. I have confidence in every play, no matter if they work out or they don't, because I know most of them are going to work out. But the rule is to start small. Okay? You're going to be doing this for the next so many years. Start small. Believe me, that's the right way to do it. Plus, you won't have jitters. You won't be nervous. You won't have that, tingly feeling in your stomach or anything like that. You'll go out there and you'll say, okay, here it is. Here's my stop. Here's my target. Wow, I made money. Okay, there's an old rule I learned many, many years ago. Scared money never makes any money. Okay, start small. Okay, start small. It will build up. I assure you that much. All right, let's go to the next one. In spirit of hits of a level. Now, this is where it's pretty important, and I did not elaborate on this yet. In spirit hits of a level. If a setup bounces sharply before your level within like 5, 10 cents, it may be best to leave it alone should price break back down into that level. Okay? We want the first hit. All right? So sometimes you may miss it by a few pennies. I missed 3 stocks today. 3 by less than 5 cents. Now, the second time around, they came back into my level. Does anyone think that I took those equities or not? No. I didn't do it. I didn't do it. I don't do it. You don't want to get into the habit of doing that. Okay? No sloppy seconds, right? So if a stock comes very, very close to your level, and Gareth is really good with pointing this out to everybody in the chat room. He's like, it's in spirit of hit. We're going to leave it alone. Okay? So remember, if a stock comes real close and it bounces, now here's the general rule. If it bounces and it hits our target or our expected target, you definitely don't want it. Okay? If it goes to our expected target, you definitely don't want it. If it didn't trigger, it didn't trigger. All right, it's over. Just leave it alone. There's no sense putting money at risk. Okay? Especially if it's a strong gap. This will notoriously occur during the week of monthly options expiration. Now, I wrote this stuff up a long, long time ago. But look at that. And what is today? Options expiration week, right? It's always better to live to take another trade. These trades should be quick and easy. You do not want to fight these stocks. Okay? Now, these are rules to live by when you're trading the gaps. All right. A couple of questions here. Rishi saying, Nick, I think one of the best parts of methodology is the emphasis on discipline. Yeah, I mean, if you follow the rules, you're going to be in good shape for a long, long time to come. If you break the rules, I've seen traders come and go, and the ones that have broken the rules are no longer in this business. Traders that have obeyed the rules and abided by it, they're around forever, and they're making lifestyles for themselves. The ones that break the rules, they're here today, gone tomorrow. Jerry, have a great evening. We're probably going to do a little bit more because we're going to go over tonight's earnings, and I'm going to show you how we get those earnings or tonight's gap plays, and tomorrow we're going to look at tomorrow's as well. But have a great evening, Jerry. Thank you for coming out. Doyle saying, Nick, on stops, do you wait for a close, or if it hits your stop and wait? If it hits your stop, you're out. No close, hard stop. Good question though. Good question. Rishi saying, Nick, this has literally changed my trading account. The methodology, excellent, excellent. Love hearing that. Excellent. It's changed a lot of lives, believe it. That's the reason why we do it. Yep, Doyle saying PPT forever. There you go. But it really has. It has changed a lot of lives, and that's really why we do it. Peter saying, Nick, do you set the stop immediately after fill or mental? No, as soon as I hit first target, my stop is in if I'm holding for second, or I put the stop in immediately, Peter, if I'm decently in the money. Because if I have the momentum going now in my favor, it shouldn't stop me out. Okay? Daraj saying, Nick, can we put bracket orders to play this out every morning? You could, I guess. I don't do that, but I suppose you could. Peter saying, Nick, if it goes against immediately, then you just stop out. But generally, listen, I'm going to be honest, I never get into a gap play where I'm in the money immediately. I'm always getting pierced. It takes, usually a few seconds, even sometimes a couple minutes, and then it starts to work. That's why I'm telling you guys to start small. Don't use a lot of share size. You got to get comfortable and have faith in what you're doing. And once you do that, then, it's kind of a piece of cake. The stop amount is the same as the target, Ehab. Yep. Stop amount is the same as the target. Okay? But as long as you guys use high volume stocks to start, you'll be fine. And again, if you're in the chat room, you check the levels with me. You check my levels with your levels, and that's how you'll get better. All right, so let's go over tonight's earnings plays. We're going to go with American Express first. Now, I haven't even looked at, AXP. I haven't even looked at it yet, so I don't even know if it's what's it going to give us. So let's take a look. But this could be in play tomorrow. All right, so if we take a look at American Express, okay, we take a look at American Express. We can see the stock today closed at 80.91. It's trading at 79.65. So would this qualify for tomorrow's gap play? Would this qualify for tomorrow's gap play? No. It's not a big enough move. But guess what? If by some chance the stock tumbles, I know we could find a good level on it. And let's just do that for fun tonight, okay? So now we're going to go to the daily. There's really no fib level here that I even like, all right? 80.91 to 78 low, that's nothing. Now watch this. We go to a weekly chart. I don't even really like any of these weekly levels. I don't even know where to take it. But guess what? I do like this level. So let's just blow this up to a monthly. All right, let's go back to the 2009 low. And sometimes these levels will even play out on a swing basis at times. But look at this. So you got a 2.5 retrace at around 74.60. But look at this level at $63.18. That's a great level. Would you take this level at 63.18 if by some chance American Express got down there tonight? Absolutely. You do it with both hands. And let me show you a little secret why. All right. Not only is 63.18 to 382, but it's my favorite thing of all time. Scene of the crime. It's where the stock broke out before going to a new all-time high. So we love this area right here. Anytime you get that, you know there's going to be people coming in to defend the equity. Okay? You know it. And how do you know it? Because this is where the institutions, the big money crowd, came in and broke it out. They are not letting this go below there. That's the way the institutions work. Does everybody follow me? So if you get this stock down here at 63 and change, you scoop it up with both hands. All right? All right, let's go over the next one. Schlumberger. I have no idea. I have not looked at these yet. Just doing them live right with you. All right, so Schlumberger closed at $91.89. Let's go to the 10-minute chart. After hours, it's trading at 94. It's not that big of a move. But guess what? We probably could find a level on this. So let's do this. Weekly chart. pivot high, pivot low. Now the stock, I just got done saying, is trading at $94. Can we take this short at 97? Yes. Yes, we can. Would we short it at 102? Both hands. You short this stock to death at 102. You hear me? You short this stock to death at 102. All right? I will be shorting this to death at 102. All right? Look at what it's coming into. Not only is this a great level, okay, but you're coming in, you got to get through all of this, and this was huge breakdowns. You got prior pivots here. What a level that's going to be. 102 will be gold. I'm quite certain of that. Okay? Now let's check out. We know it trades over 1 million shares a day, so let's find out exactly what our target and our stop loss would be. Okay? So we got to go with wide range bars, but we want to go with the average wide range bar. We don't want to go with the biggest wide range bar of them all. So we see some good ones back here. So this low right here is 90.10. The high is 90.65. So that gives us 55 cents. This one would give us a low of 89.22 to 89 cents. That gives us about 70 cents. So we go at about 55 to 60 cents would be your target and your stop out. Okay? Does everybody understand that? Okay? Excellent. 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 Very good. I just cleared some of the screen up. Bear with me. Yeah, don't worry about swings here. This is just an intraday technique. Okay? Just an intraday technique. Here's another one, Mattel. I did not look at this one either. Looks like this is trading at 26.90, closed at 25.27. It's not much of a gap up, but let's find a level just in case it does make a bigger move. Well, we got a good one here. So let's go to, all right, so the pivot, wow, pivot high is at 48 and change. Pivot low will be right here. This may not be a bad level, but 2.5s aren't always the best. You could definitely do the 382 though at 32.31. Okay? I don't know if it gets out there, but if it does, that you'll take that. Okay? Now this stock trades more than 1 million shares a day, so we go to the 10-minute chart, right? Let's get rid of the intraday. I mean the after hours. Let's go right to market hours. And we look for a wide range bar. Now we don't want to use the biggest wide range bar. We want to use an average wide range bar. Let's blow this up a little bit. These are big moves. Yeah, so they're giving you a move of around 30 cents. So that would be good. 30 cents would be fine. Vishal saying that on the daily, it also hit the 200-day. Yeah, that could be important. But remember, daily chart moving averages can pierce, right? So it's hard to pinpoint an exact number. Okay? All right, let's go over to AMD. I don't know if there's a low price equity. I don't know if we're going to get anything on this one, but we could. All right, so after hours, AMD is trading at $2.55. Let's go to a weekly on this one because I don't know if the daily would even present. Oh, maybe. Maybe 245. I don't know. Look at that for 7. Look at my eye. I just said maybe 245. So there goes your level, 245. Okay, but remember, that's a strong gap lower, right? So 245 on AMD tomorrow if you want to try that one. Got to be quick. I don't know what you're going to get out of this. I mean, it's hard to go off of this thing. Wide range bar, I guess, is... Yeah, it's only 4 or 5 cents. Maybe you get 7 or 8 cents. Okay? Generally, Ren, we're going to look for 5% moves. Okay? Good question. We're going to look for 5% moves. 5% or more. Anything above 5%. Not 10 is you know, we get 10, that's great. But 5% or higher. Moves of 5% or higher qualify. Okay? You got it, Doyle. Target and stop loss more than 1 million shares traded a day on daily volume. You take the 10-minute average wide range bar. Less than 1 million, use the smallest wide range bar on the daily. Smallest range bar on the daily. Correct. Very good. Excellent. Karthik saying, Nick, if you already explained this, but the question is, if the levels are not hit tomorrow morning, should we forget them? Yes. Forget them. Okay? If they're not hit tomorrow, it's a one-day event. Okay? One-day event. All right, let me see what we got here. We did now already. Now, tomorrow, we're going to have General Electric. Okay? Tomorrow morning. So now, how do I know General Electric is coming out tomorrow morning? Anybody? How do I know that's going to be in play tomorrow? Well, I just check the earnings reports. Yeah, just go to the earnings reports. You can find that on Yahoo or Bloomberg or anywhere that has earnings. Okay, check the earnings reports. Tomorrow we also have Honeywell. I've traded Honeywell a lot of times in morning gaps. When it does make a big move, it's a good trading stock because it's got a lot of volume. Okay, it obeys the laws. So here, this should be a good stock to keep on the radar for tomorrow morning. This is a great stock for tomorrow morning. Seagate. Okay, this is a mover. Seagate's up and down and all around. This thing can be all over the place. Now, if Seagate moves, what else would you look for to be a mover as well? So Seagate's in the disk drive, the disk drive maker. No, you'd look at, you got it, WDC, right? Western Digital. Okay, maybe SanDisk, but more Western Digital. Western Digital will be another one. You could look at that in sympathy, right? So sometimes, it's funny, the other day, I gave out a level on UMP, Union Pacific, but it was Norfolk Southern that was making the move, and I played Union Pacific. So, you get to do those sympathy plays, both were railroad stocks. Also, I had to play the other day on CSX. So, if one is in motion, one stock in the sector, and it's a market mover, generally the other ones are going to follow it too. Birds of a feather flock together. So you always want to watch. So if you're going to look for Seagate tomorrow, which has earnings in the morning, we could also look at Western Digital. Okay, I think Reynolds, RAI, has earnings tomorrow. So this here is tobacco stock. Again, these are good movers too. So we'll keep this one on the radar as well. All right, and then when we get into next week's action, we're going to get tons of earnings. Okay, but stick with the household names. Stick with the stocks that have volume. Okay, those are the best ones. Ones that don't have volume, they're going to be trickier until you get used to this. Then you're going to find that those are the most profitable ones. But that's going to come in time. That's not going to come right away. Okay? I think we got 2.5 hours in. Pretty good. Does anybody have any questions for me? Feel free. Vishal, any questions for me? Are you clear on all this? Lily, how are you? I didn't even know you were with us tonight. Excellent. Lily saying, Nick, do you find the candle on the 10-minute chart? Yes, I find it. I find it. And all I do is just say we're looking at Reynolds, right? So we know it trades over 1 million shares a day on average. So all we do is go to the 10-minute chart and we look for the average wide range bar. So you can see, any of these candles are good. So the low, and it's about, it's not an exact science. It's a good proximity. So the low on that candle is $74.49. The high on the candle is $74.80. So you're generally going to look for a 30-cent move in that stock. Okay? That's how I do it. Now, if it was a light volume stock, say like Ralph Lauren, which doesn't trade 1 million shares a day, okay, then I go to the smallest candle I could find, and any of these will do. And that tells me the low on the stock is 139, the high is 140.50. That tells me we use a $1.50 stop loss, $1.50 target. Okay? All this is saying, Nick, how to manage see all moves? Well, I'm starting to do gaps now. I mean, I'll do gaps at as early as 7 o'clock in the morning. So I'm going to go through, next week, I'll probably be starting the gap plays at 6:30 in the morning. You just got to go through them, and I have like on TradeStation a list that tells me which percentage gains are the biggest, so I can narrow it down that way. But I have access to all the gaps, and you can do it too. So if anybody does have TradeStation, you go on the TradeStation hot list, and they have all the gap downs, all the gap ups, okay, and you could do it by percentages. Doyle saying that gap plays are based on the day of earnings, regardless if or after hours. No, gap plays don't have to necessarily be earnings. Mostly they are, but they don't always have to be. They could be anything. Could be, it could actually get a gap play on a halt. We had that happen the other day with Zillow. Vishal saying, Nick, do you set the fib levels the night before for a stock that reported the evening? No, I mean, I'll do it anytime after the move is made, right? So we don't trade before the move is made. We just see where the gap up in the morning is, and that's when I'll set the levels. But sometimes, I mean, if we get a lot of gaps, I'll do some of them the night before, and then I'll look at the open and see where they are. I'll be ready. Usually have my level 2 loaded up, if I like to play, and I just let it trigger. Jones saying, Nick, do strong gaps usually are a continuation of the trend? Following days and week gaps do change trend or cannot say high probability? No, I agree with you. I think they are, but it's not 100%. But generally they are. So strong gaps usually are a continuation of the trend. Vishal saying, why is the average 5% gap important? Because that's where you're going to make the money. If the gap is 1%, you're not going to make anything. So don't even waste your time. You're not going to make anything there. It just doesn't have a big enough move to warrant the trade. even anything with scalping, right? If anybody that's scalped with us in the morning knows that in order for us to make money scalping, we honestly need to see some movement in the equity, right? I can't scalp a stock that's moving 20 cents. That's just not going to pay me. Market makers eat me alive. I gotta exploit the bigger move in the market. All this saying, Nick, I mean, more moves and what is the best amount to keep on focus? I'm not sure I get that question. But, you know, just to narrow it down, make sure in the beginning you stick with stocks trading over 1 million shares. That's going to be best. And stocks that move more than 5% qualify as a gap play. Okay? Ehab saying, Nick, sorry, I'm thinking outside the gap plays. Do big intraday moves over 5% due to news with no gaps follow similar rules? Sure. I mean, you know, anything can be a fib retrace. So, yeah, I mean, they're going to follow similar rules. It's not going to be exact, but, yeah, anything moving, you know, we're going to use anything from the methodology to make money. I mean, that's the bottom line, you know. I'm not looking to just do judo. I'm looking to do taekwondo. I'm looking to do jiu-jitsu. I'm looking to put all the techniques to work, you know. Karthik saying, Nick, does this technique work on stocks only or index ETFs? I mean, it can work on ETFs too, but you've got to have a big enough move. A lot of ETFs, I mean, the triples and the doubles will move 5%, but you always want to go off of the one-time ETF. Okay, so you're going to use it off of like a USO or SMH or something like that. You know, use the one-time ETF. Don't use a UCO or triple spider or something. That's no good. Joan saying, Nick, what probability would you say? Elaborate on that a little further, Joan. I'm just probably lost on your first question. I erased it already. But if you could elaborate a little bit on it, I'll answer that one. Jim saying, Nick, Ralph Lauren looks like it's forming a good base, higher lows, congesting above the 20 and 50 moving averages. Yeah, I mean, maybe, but, you know, here you got a little bearish wedge, so you got to be a little bit careful there. But, yeah, I think the stock probably, in the near term, not to get off track here, but, yeah, you probably put in a little bit of a low here. So I don't think that we're going to take out these lows on Ralph Lauren until maybe after earnings, if it does happen at all. Joan saying probability on strong gaps being continuation of trend and weak gaps trend. I don't know that the number, you know, the percentage, but I'm going to say it's definitely over 50. So it's more than half, if not even higher, much higher than that. But I couldn't give you a percentage on that. I'm just not sure. But I'd easily say 60, probably 60 to 70%. Manish saying, Nick, does this technique can be used for spiders? If you get a big enough move, we generally don't get a big enough move in the spiders to use it. So unfortunately, I love trading the spiders or the ES futures, but we just generally don't get a big enough move. If we get a 5% move, though, yeah, we could use it. But, you know, how often do we get a 5% move in the spiders? You know, because the spiders represent the entire market. Okay? Anybody else? Any other questions? I know I told you guys we'd be done in 3 hours. We're going to be there. It's only 20 more minutes to go. Ehab saying, does this work for international stocks in particular? I was wondering about the number of candles that qualifies consolidation. Have you taken the methodology yet? Yeah, you're going to want to do that. I go over, you know, time counts probably for 2 hours in that webinar. So, yeah, that's not good enough, though. You're going to need to take that methodology at some point, Ehab, and it will change your trading career. I see the stage you're at. I know where you are. I think you're going to benefit immensely. In fact, you know, you could ask Mike, and you could ask any of the traders in here. I mean, all of them that have taken the methodology, I go through the same stages with them, so I get to kind of know the characteristics. But take it. We're going to cover consolidation. I don't mean to push it on you, but at some point, take it. 1:30 in the morning there, Rishi? Excellent. All right, go get some rest. Excellent. Glad you enjoyed it. Fantastic. Yeah, that's the next one, Brian, unfortunately. But it'll be a good one, I promise you. All right, everyone, we're going to wrap it up. Manish saying, Nick, confirming again, strong gaps, we play continuation trend, weak gaps, we play reversal trend. Oh, no. Strong gaps, you're only taking a little bit of money out of the market. Weak gaps, you look for a little bit more out of the market. You could usually let the stock run in your favor once you take the play. Okay? Do you follow me? Okay, excellent. Very good. I want to make sure everybody got that. You're welcome, Joan. Thank you so much. Excellent. And hopefully we'll get some gaps. But you guys got a good read on tomorrow's market already. Okay? So watch out for the gap alerts. Hopefully we get some big movers. Okay? And if not tomorrow, we'll definitely get them next week when all these earnings pour in. Excellent, Doyle. I'm looking forward to it, buddy. Thank you, everyone. Yep, target and stop will be in the email as well. Yep, that'll be done. Okay? That's the way to do it, Pat. All right, everybody. God bless. Have a great evening. Thank you all for coming out. Take care now. not to get off track here. But yeah, you probably put in a little bit of a low here. So I don't think that we're going to take out these lows on Ralph Lauren until maybe after earnings, if it does happen at all. Jones saying probability on strong gaps being continuation of trend and weak gaps strain. I don't know that the number, the percentage, but I'm going to say it's definitely over 50. So it's more than half, if not even higher, much higher than that. But I couldn't give you a percentage on that. I'm just not sure. But I'd easily say 60, probably 60 to 70%. Manish and Nick, does this technique can be used for spiders? If you get a big enough move, we generally don't get a big enough move in the spiders to use it. So unfortunately, and I love trading the spiders or the ES futures, but we just generally don't get a big enough move. If we get a 5% move, though, yeah, we could use it. But how often do we get a 5% move in the spiders? Because the spiders represent the entire market. Okay. Anybody else? Any other questions? I know I told you guys we'd be done in 3 hours. We're going to be there. It's only 20 more minutes to go. Ehab saying, does this work for international stocks in particular? I was wondering about the number of candles that qualify as consolidation. Have you taken the methodology yet? Yeah, you're going to want to do that. I go over, time counts probably for 2 hours in that webinar. So, yeah, that's not good enough, though. You're going to need to take that methodology at some point, Ehab, and it will change your trading career. I see the stage you're at. I know where you are. I think you're going to benefit immensely. In fact, you could ask Mike, you could ask any of the traders in here. I mean, all of them that have taken the methodology, I go through the same stages with them, so I get to kind of know the characteristics. But take it. We're going to cover consolidation. I don't mean to push it on you, but at some point, take it. Aha, 1:30 in the morning there, Rishi? Excellent, excellent. All right, go get some rest. Excellent. Glad you enjoyed it. Fantastic. Yeah, that's the next one, Brian, unfortunately. But it'll be a good one, I promise you. All right, everyone, we're going to wrap it up. Manish saying that confirming again, strong gaps, we play continuation trend, weak gaps, we play reversal trend. Oh, no. Strong gaps, you're only taking a little bit of money out of the market. Weak gaps, you look for a little bit more out of the market. You could usually let the stock run in your favor once you take the play. Okay? Do you follow me? Okay, excellent. Very good. I want to make sure everybody got that. You're welcome, Joan. Thank you so much. Excellent, excellent. And hopefully we'll get some gaps. But you guys got a good read on tomorrow's market already. Okay? So watch out for the gap alerts. Hopefully we get some big movers. Okay? And if not tomorrow, we'll definitely get them next week when all these earnings pour in. Excellent, Doyle. I'm looking forward to it, buddy. Thank you, everyone. Yep, target and stop will be in the email as well. Yep, that'll be done. Okay? That's the way to do it, Pat. All right, everybody. God bless. Have a great evening. Thank you all for coming out. Take care now.